Dad, you are a very successful young man.
Would you say that? I mean, I don't know.
Dad, you were able to retire at 55 so that you can just like make paddle boards and watch UFO documentaries. And and you're my hero. So
I've been
how did you do that? How are you able to uh invest and just kind of like keep everything good so that you're like, I'm 55, like nuts to this, like peace out, corporate fuckers. How
well,
did you do that?
well, early on in my career, I discovered that the only part of the stock market that you could really count on were portfolios of dividend paying stocks. And the reason was that normal growth stocks, or stocks without dividends, the volatility, the ups and the downs were so great that the participants would be scared out of them when they went down. And so they'd go down a lot further. So there was a lot of volatility. Now, in a dividend stock, if you're making 2 or 3 or 4%, and you're getting that all the time, that doesn't change if the stock was higher or lower. So when stock went down, the dividend gave it a buoyancy. So fewer people would jump out of it during a down period. And so the stock would continue its upward momentum at a steadier pace. And so if you looked at all the mutual funds from 1980 until 2000, it was the plain Jane dividend stock portfolios that would win the race, but they wouldn't be flashy and they wouldn't be the fastest and they wouldn't be the greatest. They wouldn't be this and that, but they were the tortoise that got to the finish line. But a large part of my success was when you're younger and you're trying to build assets, you put a bulk of your money in these dividend stocks for your consistent runner, and then you have to gamble. And you have to put a lot of money in one thing or 2 or 3 things that you really think are going to run. And for me, it was this silly little company that I joined in 1985, whose stock was $10. And it was Raymond James, and they only had 300 stockbrokers. And when I retired in 2005, they had 6,500 stockbrokers, and the stock had gone up 500 times.
Holy shit.
Did they pay in stock?
Yeah, they gave me stock and I bought stock. We buy it at 85 cents on the dollar. And they gave.
Wow.
And so it just grew bigger and bigger and bigger and bigger and bigger. And I knew by being inside the company that they were doing good things, right things. They were long-term investing, not short-term. And I knew this thing had longevity. It wasn't the fly-by-night. It was going to succeed. And everybody thought, well, it's kind of a laggard. It's kind of slow, but the thing just kept going up and up. It actually went up 20% a year for 15 years in a row.
Oh,
wow.
So that's a huge compounding rate, because if you make 20%, you double every 3.5 years.
that's
Wow.
double the 72 months.
Yeah,
That's
it's real.
double your.
Yeah, so 20 goes into 72 3.5 times. So every 3.5 years, my money was doubling.